All right, what's up? It is Sunday. We got a lot to cover. First, I guess I should talk about this. My latest donation, $10,000 to this Olympic runner, Prince Mumba. If you're in the LA area tonight, uh, NBC LA is doing a little feature on us and Prince Mumba's awesome story. So tune in if you get NBC LA. It'll be online probably tomorrow, but really proud to be able to help him chase his dreams, and he's going for gold in Rio. So awesome stuff. One other question that I'm getting a lot of: the Small Cap Millionaire. So this is my long-term newsletter. This guy Tom just sent me this email today. He's been a subscriber for the last 3 months, and he wanted to know my comment on my outlook for long-term stock investors. And I'm really excited for, my longer term portfolio. As Tom says, WKHS has been one of my biggest winners. I was buying it in the sevens, and he just sold it in the nines. I sold some in the nines too, after a few weeks or a few days. And, I'm excited for 2016. Let's talk overall markets for a second. Here was GNCA. This was a nice Friday short, but I was traveling, so I couldn't really get in on it. But if you look at the overall market, I mean, we had a big scare, and now we're right back to the highs. And this is healthy consolidation. I know it's scary, but we're right near the highs on the S&P 500. So if you scroll out, I mean, this is fantastic consolidation, and you can kind of say that this is a double bottom. Now the question is, can we break this level? Just a few more percent to go, but if we can, I mean, this will be a huge breakout. And I'm frankly just scared to short. There's a lot of companies that are junk that I want to short, but if this market breaks out to new highs, be careful, short sellers, as a lot of shorts have learned the hard way. SKYS, this one, if you look at the past few days, I mean, it's pretty crazy how far it's gone from 1 to 4, but it could keep going. I'll definitely look to short this, even though it's an earnings winner. It's a solar play, so it's kind of dependent on oil. And frankly, I think this is just a lot of it is a Friday short squeeze. So I'm not going to be aggressive shorting. I'm not going to be like, this has to drop big. It's not a pump. But I do think that this kind of, chart usually leads itself to a good short. It's not random that it's been downtrending for a year. The same thing with GNCA the other day. Congrats to those of you who shorted. On Thursday, you shouldn't have been shorting the first big green day. That's scary. But when it starts to go red on Friday, that's a good short. And then we also have DRWI, which looks like it could be a good short soon. But as short sellers learn the hard way, just because a company is junk in this market, you have to respect it. The other day, all these shorts were like, oh, it's such junk. It's only up on this stupid news. And then, the stock spiked and Twitter's quiet because obviously these traders aren't transparent and they don't want to talk about, the losses that they have. But this is going to be a great short. So I'm watching all these, and SKYS, there might be another one of these kinds of plays. This is the key. I missed my buy on Friday. I was covering RJetQ, and I specifically missed it. I was trying to buy it right here at like 310, 320, and it just went too quickly. And as I said in the Friday video lesson, it's probably a good thing because by the time I could even type out the alert in like 3 minutes, it goes from 310 to 410. So the alert would have been screwed up. You have to be prepared. You have to learn yourself. And I think that's the biggest lesson. And that's why, I'm so proud of this sale that we're having right now, this birthday sale, 30, 40, 50% off on different newsletters. Small Cap Millionaire is on sale, only the annual. So if you want to be a long-term newsletter subscriber, you can save 35% now. And then also these DVDs, watch them all, especially new ones. My newest one, Spikeability, is a must-watch. Trading Around Equilibrium is Matty Owens, Triforce trader. He just passed over $1 million in profits. My How to Make Millions DVD is now my best-selling DVD. All goes to charity. It's 35 hours long, and we've raised, I think, 1.2 million now for charity, which is awesome. And then Trading Tickers is Tim Grittani's new DVD, where there's over 3 dozen live trades, and he also shares everything about his strategy and all these DVDs. I mean, you really can't go wrong learning from successful traders who share everything. You can go very wrong learning from, quote, successful traders who only show a few screenshots here or there, and they make you think that they never lose. That is not the case with everybody who has a DVD here. We're fully transparent. Sometimes we make mistakes. Sometimes we look like idiots, but this is the future. Transparency is the future. All these narrow-minded, introverted freaks who don't want to share everything, guess what? I'm sorry, you're dinosaurs. Your time will come. For now, I want to also talk about the first quarter is over, 2016, and it's really good for you guys to review, you know, all your trades. I'm going to pull up here Tim Grattani. Tim Grattani is my top student. He usually does a recap every month, but he has a good excuse this time, and he says March recap will be out late next week. Sorry for the delay, but I'm in Iceland. Tim, take your time, okay? Enjoy yourself. That is the beauty of trading. It's not just about making money. It's about actually spending the money on yourself, your loved ones. If you want to donate to Olympic runners, I actually have video. I hope NBC shows it tonight where I was actually racing this Olympic runner and he gave me this huge head start and he still smoked me. And it's just awesome. You know, I love the freedom that comes with, you know, very successful stock trading, but it does take years. I don't want you to think that, oh, you're just going to make all this money in a month or a week or something like that. I get emails from people, they're like, I got to pay rent next week. Give me a good stock. That is not the right way to approach trading or the stock market. It's terrible. Even Tim Grattani, I like to point out that yes, he is my top student. He's taken 1,500, turned it into nearly 3 million. But for the first few months, you can see all of his trades on Profitly. He lost rather consistently. So if the single best trader in the past 5 years, and I think that with his track record, I don't see anybody in the world with as good of a track record as him, all transparent. But if he, the best trader in the world over the past few years, lost money for the first few months, how do you think you're going to do? So do not expect to make money right away. Do not expect to make money consistently at all. Remember, most traders lose. You need to really focus on studying. That's why, you know, people are like, why are there so many DVDs? I don't want to watch it all. This is not an exact science, okay? Trading around equilibrium is about futures and options. I'm going to do a full review on it. It's, 16 hours. But, you know, he's a successful trader. Tim Grattani's a successful trader. I'm a successful trader. You have to use bits and pieces that fit you, you know, and we all have slightly different styles, but we all have rules and we all have strategies, and that's the key. So for 2016, I'm up nearly $20,000. I'm trading the majority of my trades with just a $12,000 account. My $12,000 account is now roughly $21,000. So later tonight, I'm actually writing a post detailing that small account, but I also trade with a $500,000 account. So all my biggest gains this year are with a $500,000 account. And I don't trade often. It's just like when I want to take a bigger position and, you know, I want to show you the difference between, you know, how to grow a small account and those of you who have a somewhat larger account and you don't need to know how to get over the PDT rule. I have students of all over. So I try and denote, you know, like I say, look, use some of my new $500,000 portfolio and I made 2,000 on this one. So roughly half and half is what I've seen. Half of my gains are from my small account and half my gains are from my large account. And it's a good, you know, you can see all this, but it's a good example to show you that just by having a larger account does not necessarily mean that you're going to make more. I think that I'm actually, if you look at my trades, I'm a better trader with my small account because I'm forced to take, you know, better trading setups because I don't want to waste my day trades, and, you know, I want to aim at specifically lower prices stocks so that they can have more ideally gains. So if you look through all my trades, you know, most of my big trades are most of my biggest winning trades are with the $500,000 portfolio. So like Watt, this was like a, you know, an $11 stock. AQXP, I'm saying using more of my $500,000 portfolio. Here I say I use my big account, that's my $500,000 portfolio. But if you scroll down and you look at some of these trades, I'm using my small account right here on $600. This was a great trade on NXTD where I'm buying it at 70 cents. I actually sold this after hours at 82 cents, nearly 18%. And this was a fantastic trade on a very small position. And I could have taken a 50,000 share position. There was enough volume and there was a nice catalyst. But I want to show you, that you can make good amounts with a small account too. Here is ELMD. This was an earnings winner, but it had weird price action, and I probably got out a little too soon. CDRB. I thought that I chased this low float spiker. I think this was at 4-ish, right? So many trades. Yeah, I thought that I was chasing this at 404, and so I sold it for a quick 10%, and I was really happy. And then I think later that day it hit 6. So, or I remember the high 5. So I chased it, quote, a little bit, but it was not necessarily a chase. Sometimes when you have a low float spiker and you're buying it for the morning spike, you can be a little more aggressive. But I took a good chunk out of that one. Here's YOD. This was an earnings winner the other day, and this was during a live webinar. And it hit, multi-month resistance at 225. So when I go into a trade, especially this year, I'm looking at to see where the past resistance and past support is. So as it gets closer to 225, I would have loved for YOD to blow through 225. I got in at 201. But when it hits 225 and then just can't get back and comes down, and then it comes back to the 220s and it's kind of a double top in the 220s, I'm out. And I'm like, all right, I respect your 225 top. That's what I told the market. And so I took my profits, not as much as I wanted, but still pretty good for a small account. And, I think now, what is YOD at? I think it's in the 190s or 180s. It totally, 180s. Totally failed. So that was actually a fantastic sell. Sometimes I'm going to sell too soon, as I did with CDRB and WATT. But at the same time, I'm locking in my profits and I'm not worrying. A lot of you guys, think that you have to be perfect every time. And so you see me sell too soon and you're like, oh, Sykes just doesn't have any patience. I don't have that much patience, but I sell too soon to protect myself. You won't see me sell too soon and regret it because plays like this, great example. Here's another one, TRXC. I mean, this was actually probably one of my best trades in the first quarter, and I bought it on a massive dip in the 360s. It was on my watch list as a potential dip buy. Let's see if we can see it in the chart. Year to date, this has been a big runner. It was right here on this day, and yes, okay, you have a nice little, or maybe it was here. When was it? 310, April 10th. March 10th. Yeah, okay, so it's here. So, it is a perfect double top here at 450 so far, although it's getting close to breaking out. I'm actually watching TRXC as a potential buy. But when it dropped from, 460 to 360, this was all like in an hour. And so even though a lot of people hate on this company, this run-up was in reaction to earnings. So in my mind, this is an earnings winner. And I wasn't going to chase it because, again, I don't want to chase any company. But when it comes down so much so quickly, and it's clearly just panic selling and stop losses going off, the low here was 355, and it was exactly the top, right here. So the former resistance becomes support here, and I got it, 4 cents off the low, and it bounced nicely, and I could still be holding it. It never got back down to that price. So if you're looking to dip by an earnings winner, look at where there's going to be support. Don't just chase any random stock. And I think that's a very good lesson for this year, for 2016. Here's my first down day. This was my trade on Friday. I covered it too soon, as it turned out, but I made 5% overnight. Didn't waste a day trade. Still made my flight on Friday. So, this was a fantastic trade. If you can make 5%, and you're betting, roughly $12,000, and you have a small account and you have a constricted schedule that day, especially that influences your trading, you do that. And I'm very proud to show my $12,000 account growing trade by trade. Sometimes I lose. I don't want you to think these are all gains. I mean, I just searched by the biggest gainers, but I definitely have some losses here. This is actually in my longer term newsletter. I had some small losses. In LNCO, I just got squeezed. That's why I don't like commodity plays. Here was another longer term. I have two long-term losses. So actually, the roughly $2,000 of this 18,000 is from long-term losses. So I'm really, if you look at my short-term trades only, I'm up over 20,000. But the long-term losses are okay because despite losing 1,000 on two plays, my WKHS gains are now roughly 4,000. So again, I'm not afraid of small losses. I never have been. I never will be. I'm always afraid of breaking my rules and letting a small loss potentially turn into a big disaster. CELH, I didn't have to actually cut losses. It came back to the twos. It would have been a nice little profit. But, this was early in the year when the whole markets were crashing and I was just freaked out. So I don't mind that. And I sold, the whole market was actually starting to come back, but this stock wasn't. So I was a little freaked out and I cut my losses. LNCO, I don't like trading commodity plays. This was the perfect pattern, but oil spiked overnight and there was nothing I could do. A few days later, obviously, it would have been a huge win. OHGI, I mean, this was a great loss cutting because it didn't bounce the way that I wanted. I didn't have news the right way. And, frankly, it just kept going down. So cutting losses is good. Here's another one. This was actually a great loss cutting where, I bought this stock. They had good news. It was spiking in the morning, and then it just ran into a wall. And I don't like getting in and out, inside of like 10 or 20 minutes. But when the price action, tells me like it's just done. It's not going to bounce anymore. It's not going to spike anymore. I'm not just going to take a bigger loss for no reason. Sometimes this does happen where you have a big seller despite the news and it just can't crack, and you got to cut those losses. And I did that well. Here is my ZAG loss. XLIT, I had some losses. I got Interactive Brokers had sent me some warnings of some buy-in, so I actually had to lose a few $100s. But then a few days later, I got back in and I was there for the big crash. You Trading Challenge students witnessed it nicely on a live webinar. That was a nice treat. CPXX, I shorted a failed morning spiker, and this one was actually during my market mastery. So this was with students in person in Miami a few days ago. And, it's a small loss in the grand scheme of things, but this is probably my worst trade of the first quarter because I specifically, this was a choppy stock and it had gone red, but it wasn't holding red on the day, and it was in the morning. And, you have a lot of fake out breakouts and a lot of fake out breakdowns in the morning. And, it started going green and I hesitated and I was like, maybe it's still going to go red. Maybe it's still going to go red. And I held it and I hoped. And, $387, it doesn't even look like a big blip either way in my account, but I remember it because if I had stuck to my rules when I'm shorting a stock going red on the day, once it goes green, even a little bit and holds there, you got to cut losses. And this should have been about $150, $200 loss. So again, in the grand scheme of things, the dollar amount is not important, but breaking rules is very dangerous, whether you have a small account or a big account. So this is a trade, this is definitely my worst trade of the first quarter. So that's just an example to show you how money can be misleading. A lot of you guys are taking bad trades, but you're making money on it. And so that's giving you the wrong lessons. I don't judge a trade by how much money I make or lose on it. I judge a trade by how well I stick to my initial plan. And sometimes, I have to adjust my plan. But all you can do on every trade is go in with a plan and then tinker with it, adjust. Like, okay, this earnings winner earnings winners are hot right now. Let me get a little more aggressive. Okay, I'm shorting pump and dumps is working better, so let me get a little more aggressive. Oh, it's more of a bull market now, so let me tone down on my short selling. So I'm always adjusting plans based on how successful recent trades are. But you gotta stick to the plan. And if you don't have a plan, you're not really trading. So create a plan and stick to it. And if you break the plan, we're all human. It's not the end of the world. But don't let yourself just off the hook as I'm doing. I don't care if I'm having a very good year and my small account is up 70% and the markets are basically flat. I care about breaking rules, and I broke my rules on that one. And I won't let that happen again. Here are some other small losses. And again, I don't mind small losses. LPTH, I actually dip bought this, and then there was I said, huge wave of selling. I was like, not sure what's happening, but cutting losses quickly. As it turned out, the street sweeper had done an expose. Just an unfortunate coincidence that I had, just bought it and street sweeper had exposed it. But I didn't care what the news was. When I was selling, I didn't even know what the news was. I just saw that it wasn't going in my direction, and I cut my losses, and I lost 150 bucks. And that protected me. I think later in the day it would have been like 300 or 350. The next day I actually would have been fine. The street sweeper expose turned out to be nothing, and the stock squeezed, and this probably would have been a profit. But I don't risk that, okay? Especially when there's an expose. The other day, I was long Watt, WATT overnight. I sold it pre-market because I didn't get the news that I was expecting overnight. Sometimes I go in with a plan of specific price action, every time, but sometimes on top of expecting certain price action, I expect certain news. And on WATT the other day, I was expecting an overnight news item. Let me see, how much did I make? I made a few $100. It wasn't a huge position. Where was it? I've sold it in the low 11s a few times. Let me see, 1 second. This was on the initial news. So sometimes I buy, right when the news comes out. Sometimes I'm dip buying. Sometimes I'm buying overnight. If you watch my Spikeability DVD, you see my different times that I like to buy. They're not random. I don't just buy randomly. I only had 900 shares, so it wasn't a huge dollar win. But this was a well-executed trade that I want to show you. Here it is, $337. So again, sometimes it's not the biggest gainer or the biggest loser that I remember. But I said, look at this. I'm using roughly half of my small account overnight in anticipation of a gap up morning spike due to an article or analyst upgrade. Today's news is big. The question is how quickly all people realize it. Will the press pick up on it? Goal is conservative, just to sell in the low 11. So I bought this at 1080. And, again, I'm not looking for a home run. I sold it pre-market into the spike, and I said this, I know I don't have to, but this was pretty much my goal on the trade, and that was a nice gain for my small account. And I also said, I don't see any big article like I wanted. 30 minutes until my live webinar. So I always like trying to trade during my live webinars. I know you Trading Challenge students appreciate it and you like it, but at the same time, I did not get the news that I wanted, but I did get the price that I wanted. So I was a little conflicted, and I was like, you know what, let me just play it safe. Whenever I'm conflicted or in doubt, I err on the side of caution, right? When in doubt, stay out or get out. And so I got out, and some people are like, Tim, you're just playing it too safe, whatever. And I didn't know this, but then an expose came out. Exposés can come out at any time. And an expose came out, I think it was like 30 minutes after I had sold it. And so there was overnight news. It just wasn't the news that I expected or predicted. And that expose took it down from 11.20 where I sold, I think, down to like 10. And it's come back a little bit since then. I think it's come back to, what is it? Is it back to 11 yet? Or back to 10.50? 10.30, yeah. So it's choppy. Exposés don't always necessarily stick. Sometimes the stocks can come back from it. But if I'm long and I have my goals hit and my article prediction didn't get hit, I'm out. If my price gets hit in any way, I'm pretty much going to get out, just because if you hit your goal, what else are you trying to achieve other than being stubborn or being greedy? So that's a good lesson from today. I'm going to go write some more tips in this blog post reviewing the first quarter. But again, my small $12,000 account is up to roughly 21,000, so like a 75% win in the first 3 months, which is cool. And I had a lot of problems for the first few weeks. And then I'm still making money on some larger bets too. But I'm most proud of my small account, and that's what my focus is going to be going forward, to show you how to grow it exponentially. So hopefully in the second quarter I'll be able to get over the pattern day trader rule and start to take bigger positions, and you'll see how this stuff can scale. It might not scale up to millions or tens of millions of dollars, but it can definitely scale from a few thousand to a few hundred thousand. And I want to show you that again and again. So I'll see you in the chat room tomorrow. Thank you.